Have happened. So, first of all, I would like to welcome all the participants, and number is growing slowly, and so now formally starting the webinar. I take this opportunity to welcome our principal ADG, Sri Sanjay Rathi sir, who is an IRS officer of 1991 batch. So now I request sir to please deliver his welcome address. Over to you, sir.
A very good afternoon to one and all. CHD Nandan Khambateji is there. Has Mr. Nandan Khambate joined?
Yes, sir, he is
Yes,
joined.
sir, is there.
Okay. Mr. CHD Nandan Khambateji, Executive Committee member and Deputy Chairman of the Direct and Indirect Tax Committee of the Thane Small Scale Industries Association, TSSIA, Thane, and other distinguished members of the trade, dear colleagues, and all the participants. I stand privileged and honored to attend a warm welcome to this webinar. I intensely appreciate the support and cooperation extended to us by the TSSIA. This association has played a pivotal role in accelerating genuine grievances at appropriate level, enabling the government to address and redress the problems in the right perspective. The role of trade associations is stimulating, shaping, and scaling up the Indian economy. I would like to mention that the DGST, that is DGTS, that is the Directorate General of Taxpayer Services, is set up in New Delhi with 6 zonal units. The Mumbai Zonal Unit caters to the state of Maharashtra and Goa. The directorate is set up with a mandate to reach out to the taxpayers to create awareness about the change in laws, rules, and procedures, and clarify the doubts arising in following the new procedures. It is the constant endeavor of DGTS to bring in current and relevant topics, thereby facilitating the trade, importers and exporters in enriching their knowledge, enabling them to become aware of the changes and procedures, which in turn, without a doubt, enhances the duty compliance. Several need-based webinars have been conducted in the past by the Mumbai Zonal Unit of the DGTS by taking inputs from the trade, and today's webinar is on one such important topic, that is the valuation of GST and the recent changes in it. Valuation of GST is the process of determining the value of the goods or services on which tax is payable. The CGST Act 2017 and the CGST Rules 2017 contain provisions related to valuation of supply of goods or services made in different circumstances and to different persons. This webinar will mainly focus on the recent changes in the valuation process. Today's speaker is an eminent and regular faculty at our training academies, that is NASIN, located in many stations. That is Shri MPS Singer, Assistant Commissioner retired. He is a Presidential Award winner. He will be discussing this topic at length. So without much ado, I now request all the participants to make best use of this session. With these words, I welcome you all to this insightful seminar. Over to you, Arvind.
Thank you so much, sir. And now I take the opportunity to welcome our today's trade panelist, Sri Nandan Khambateji. He is, by qualification, he is CA and CS and LLB too. And at present, he is Executive Committee member and Deputy Chairman of TSSIA. So I request Sri Nandanji to deliver his inaugural address. Nandanji.
Good afternoon, everyone. Thank you, Sanjay Rathi sir, Principal ADG, Shri A.K. Singh sir, Additional Commissioner. We have been associated with DGTS, and it is a pleasure to work with you and be associated with you in such seminars and reach outs. Giving a background of TSAB, we are a small-scale industry association established in 1974. So we have long history. We are present in Mumbai metropolitan region and have more than 3,000 industry as our members. And those are mostly in the medium and micro and small categories. So we are in day-to-day touch with those members. We get the issues, we get their problems, we understand their problems, and we take those problems to the DGTS, and they are always welcome to have that solved and have that addressed. With respect to valuation, yes, it is a critical subject. It has been the critical subject even prior to GST. And when GST came, it was merger of these 3 service tax, excise and VAT laws. So the traders or typical MSMEs who were not manufacturers, they had to bring a new perspective in GST. So there are many new nuances in valuation, and it has been an ever-evolving subject. It generally includes also the tangible as well as intangible transactions or supply of goods, supply of services. So typically, valuation is the heart of GST, if you can say, based on which the final revenue is going to go to the government. So it has been a maybe interpretation issue and also critical subject. At the same time, yes, such seminars do help the trade and industry to actually get to know the law from the legislative itself or from the authority itself. And maybe this sort of seminars will definitely help. And without much time, we are here to hear our esteemed speaker, Shri MP Sengar sir. I would request him to take over. Thank you.
Okay.
Thank you for your encouraging address. So now moving ahead, I would like to introduce our today's eminent speaker, Sri MPS Sengarji. Sengarji is he joined department CBIC in 1982 and retired in February 2018. He is a retired officer, and as sir has already told, he is presidential award winner, and he keeps giving lecture and seminars, webinars in the NASEN and DGT DG systems. So, and to further add, he has also imparted GST training to number of institutions like NASEN, Mumbai, Indian Navy, Mumbai, Indian Air Force, Nasik, and so many other organizations. So now, without taking further time, I would request Sri Sengarji to start his presentation. Over to you,
Thank you.
Sengarji.
Thank you, sir. And thanks to DGTS as well as the association for giving me this opportunity to address all of you. So let us start our today's topic. I have prepared a small presentation for this topic so that I will be sharing. Just a minute. So just someone, please let me know whether this PPT is visible.
Yeah, we can see it.
Yeah, it is moving.
Okay, okay. This is our today's topic on valuation under the GST law and what are the recent changes. So today's presentation plan will be, first we will discuss about the legal provisions, and then we will summarize the legal provisions into salient points, and lastly we will have a question and answer session. So before beginning the presentation, let me request all of you, if there are any questions or queries in between the session, please just note it down and keep it to the question answer session, because otherwise it will disrupt the flow of the presentation. If it is very urgent or you want to get it addressed immediately, then obviously you can unmute your mic and raise the question. But preferably the queries should be kept to the question answer session. So let us start. This is the overview of section 15. All of you may be knowing that the section 15 of the CGST or MGST Act deals with the valuation of the supply. So the first principle, and that is since 1975 in the Central Excise Act, transaction value. Whatever is the transaction value, that shall be taken as the taxable value or assessable value for the tax purposes. So that concept of transaction value, whether it is customs, central excise, service tax, or presently in GST, it is continuing. But there is a limit to it. Transaction value has two important ingredients. That first, that it should be between unrelated parties. That means there should not be any relationship between the buyer and the seller. Second, the price should be the sole consideration. Only then the transaction value can be treated as the taxable value or the assessable value. Second, the subsection 2 deals with the certain other components of the value, which are required to be included or excluded from the value of supply, or that from the taxable value. Subsection 3 deals with the non-inclusion of discount in value of supply. That means what type of discount which cannot be included in the value of supply. Thereafter, we come to subsection 4, which says ki determination of value as per rules. It simply means ki for some reason, if the transaction value is not applicable or not available, in that case, the value has to be determined under the valuation rules. And then lastly, the subsection 5, it empowers the government to notify the determination of value in certain specific cases. So now let us go to the sections. Subsection 1, it is summarized here, which is the price actually paid or payable. That means this is the transaction price which is paid or payable for any supply of goods or service, where both the supplier and recipient are unrelated. So that means there should not be any relationship, and price is the sole consideration. So these two are the main ingredients of the transaction value: relationship and sole consideration. If any of this condition is not fulfilling, then that transaction value cannot be taken as the taxable value, and the value has to be determined under the rules. So this is the essence of subsection 1. Now coming to subsection 2, value of supply shall include what? Taxes, duties, cesses, fees and charges levied under any other law. It simply means that other than the GST levies, any other tax or duties has to be part of the taxable value. Second is subclause B, amount supplier is liable to pay but incurred by the recipient. Many a times it happens that the recipient of the supply incurs some expenses on behalf of supplier. In that case, those expenses which are incurred by the recipient of supply, but which were liable to be paid by the supplier, those has to be part of the taxable value. So examples I will give subsequently. In clause C, incidental expenses are covered. Now, besides your supply, you may be paying certain commission, packing, etc. That has to be also part of the assessable value or taxable value. Lastly, the interest, late fee, penalty for delayed payment. Many times you may be knowing that there is a credit period. Interest fee credit period, say 45 days, 90 days. But if any interest is charged for delayed payment or late fee or penalty, whatever name you may give it, for delayed payment, if any amount is charged, then that has to be part of the taxable value. Lastly, any other subsidies received by the supplier directly linked to the price, excluding subsidies provided by the central government or state government. So any type of subsidies other than the subsidies by central government or state government should form the part of the taxable value. These are the provisions under subsection 2 of the section 15. So under subsection 2, we were talking about the various type of inclusions of taxes and levies levied under any other law other than the CGST or SGST. So there was a confusion whether TCS, tax collected at source under the income tax, should be included in the taxable value for the purpose of GST. Initially, the circular was issued on 31st December 2018. There it was said that it has to be included, but subsequently on re-examination of the issue, a corrigendum was issued on 7th of March. I will be sharing all these circulars or corrigendums or case laws with the DGTS, so any participants is one, they can obtain it. So this corrigendum was issued, wherein it was clarified that tax collected at source shall not form the part of the assessable value because it is an interim levy, but and not having the character of the tax. It is not tax per se. So this will not come under the purview of clause A of the subsection 2 of section 15. Now another aspect which is covered under clause B of subsection 2 of section 15, because it deals with the expenses incurred by the other person. So a prominent example is that many times, particularly in automobile manufacturing, it happens that the original equipment manufacturer gives some job work to component manufacturer. They may supply certain dies, molds, because that they have to do, those components have to be within that strict parameters which are to be followed by that original equipment manufacturer for a particular product or particular automobile. So they supplies the dies, molds, or other things to their component manufacturer. In such type of transactions, there can be two situations. In one situation, the agreement may say that you have to supply me the components, but these are the molds and dies which are to be used by you, and that I will be supplying free of cost to you. In such a case, because in earlier central excise regime, amortized value of all these dies and molds were to be used in the value of the components which are manufactured by the component manufacturer. But now there are two different situations. If the dies or molds are supplied by the original equipment manufacturer free of cost to the component manufacturer, and the agreement says it is only for the supply of the component for which the original equipment manufacturer will be supplying the dies or molds. In that case, the amortized value or other value of the dies and molds will not be included in the value of the component. Reason being that, first of all, those components or dies, or those molds and dies are supplied free of cost to the component manufacturer. So these will be the outside the scope of GST because there is no consideration. Secondly, so far as its value is concerned, when a component manufacturer is supplying the molds and dies to the original equipment manufacturer is supplying the dies on molds to component manufacturer, obviously he will be taking its cost into consideration for supplying the components. So its value will always be part of the final value of the component. It will never be a case that value will escape taxation. No, its value will be included. But there is another case. Please see the third bullet point. If the contract between OEM and component manufacturer was for supply of components made by using the molds and dies belonging to the component manufacturer, but same have been supplied by the OEM. Yani, original contract was that the component manufacturer has to use his own molds and dies, but for some reason the dies and molds are supplied by the original equipment manufacturer. In such a case, the amortized cost of such mold and dies shall be added to the value of the component. So while dealing with such type of situations, we have to distinguish between these two situations. Now coming to third clause, yani clause C of the 15.2, commission or packing or other like inspection or certification, installation and testing charges which are normally incurred by the supplier. There may be cases where these are incurred by the recipient, but reimbursed by the supplier. So such expenses should also form the part of the taxable value. Suppose I am supplying a machinery to you at rupees 1 lakh. For some reason, installation and testing is not done by me, and I ask you to arrange your own installation and testing, but at your own cost. In such a case, that cost, because it was to be incurred by the supplier, but he shifted the burden to you. Such expenses has to be part of the assessable value under section 15. So all the incidental expenses like commission, packing, inspection or certification, installation and testing, payment charges, loading and designing, all these has to be form the part of the taxable value. Lastly, the interest, late fee or penalty for delayed payment. So not only the base price of the supply of the goods or services, if any amount is collected for reason of delay in the payment, that should form the part of the taxable value or assessable value. However, in this case, now, if it is to form the part of the taxable value, then the question will arise, what will be the time of payment? Because the goods were supplied 3 months back and you received payment, say, after 100 days. Till then, you were not knowing when you will get the payment. So you charge the interest. Interest will also be paid at that point of time. At the time of supply, you were not aware what will be the delay and how much additional amount will charge him. So considering all these factors, the law provides that time of supply for such amount like interest, late fee or penalty shall be the date when such amount is received by the supplier. Means whenever you are getting this amount on account of interest, late fee or penalty, on that day the tax liability will arise. But the rate shall be same as that of the original supply, whatever goods or services you supplied. Second point, since such charges are an addition in the value of supply, same rate of tax is applicable on the main supply of goods or services shall be applicable on the charges also. It cannot be a case that since interest is a type of service, so 18% will be chargeable. No. Suppose if the goods supplied were chargeable to GST at the rate of 6%, then whatever interest is charged on delayed payment shall be chargeable to GST at the rate of 6% only. Had it been a other case of lending money, so if you have given money to somebody, though the interest is not chargeable to tax, GST, but suppose if it is chargeable, then it would have been 18% because it is a service. So these two things we have to keep in mind. In case of interest, late fee or penalty, time of supply will be different and rate will be the same as that of the main supply. Now coming to the discount part, which is a very important factor in all type of business transactions. It is covered under subsection 3 of the section 15. The value of supply shall not include any discount which is given before or at the time of supply. So this is the main provision. Any discount which is given before or at the time of supply, it will be excluded from the taxable value, subject to the condition it should be duly recorded in the invoice issued in respect of such supply. So if it is there mentioned in the invoice, so no issue. But there are certain type of discounts which are given after the supply has been affected. For example, quantity discount. So when you make the first transaction, you are not aware whether this person will buy 100 tons from you or only 5 tons from you. But there is a policy in your company. If you buy 100 tons from me, then you will get additional 10% discount on the transaction value. In the beginning, you are not knowing, but during the year, he purchased the 100 tons from you, say after 10 months. So at that point of time, you come to know he is eligible for the discount. So this type of discount, so there are 3 distinct points. Discount can be reduced from the value of taxable supply subject to the condition. First, if in terms of an agreement entered into before or at the time of supply, means before you supplied the goods or services, it was known by way of agreement or by way of some other reason, it was known before or at the time of supply. Secondly, it must be linked to relevant invoices. As I gave you an example of the quantity discount, suppose if you have a policy that if a person buys 100 tons from me in a year, then he will get additional 10% discount. So obviously this type of discount will be linked to this specific invoices for counting that 100 ton quantity. So second condition is it should be specifically linked to the relevant invoices. And third, ITC has been reversed by the recipient on the basis of supplier's document. Say after completing the target of 100 tons, you issue him a credit note. But by then he must have already availed the ITC on the all invoices which were supplied till then. So after achieving the target of 100 ton, a credit note has to be issued to him for passing on the discount. It simply means that much value is reduced from the value of total taxable supply, but he has already availed the ITC on full value of taxable supply. So this is one of the conditions. The ITC has to be reversed by the recipient of the supply. If all these conditions are fulfilled, then any discount after the supply has been affected can also be allowed to be reduced from the taxable value. Coming to subsection 4, it is comparatively simple. It says that where the value of supply of goods or services cannot be determined under subsection 1, it means that transaction value. The same shall be determined in such manner as may be prescribed. So in the law, GST law, wherever you find the word as may be prescribed, it simply has one meaning. Either it is prescribed under some rules or notification. So it will take you to the valuation rules, that is rule 27 onwards. Now, what are the situations when the price cannot or value cannot be determined under subsection 1? One case can be that price is not the sole consideration. As I told you in the beginning itself, that there are two conditions for applying the transaction value. First is there should not be any relationship between the buyer and the seller. Second, price should be the sole consideration. It simply means that there should not be any other consideration other than the price. Simplest example I can give you about the buying a mobile phone under exchange mode. So for buying that mobile, you are paying him 15,000 rupees plus your old mobile phone. So that means there are two components in this value. One is the monetary and the other in the form of your old mobile phone. So it simply means whatever price in money, monetary consideration is paid, that is not the sole consideration. Consideration has two parts, monetary plus old mobile phone. So transaction value in this case will not be applicable. Or say supplier recipient are related. Relationship is defined under subsection 1. What type of persons will be related, that I will discuss later on. In that case also, if there is any relationship, then transaction value will not be applicable. Now, one argument may be taken. I am selling my goods to my related parties at the same price at which I am selling it to independent parties. But still, value has to be determined under the valuation rules. Now coming to the rules. Rule 27, it deals with a situation where the consideration is not wholly in money. As I gave you the example of buying a mobile under exchange mode. In that case, the consideration is not wholly in terms of money. So rule 27 will be applicable. 28, we will discuss with these rules in detail subsequently, but let me give you first the gist of each rule. 28 applies when the transaction is between distinct or related persons other than through an agent. But if the transaction is through an agent, then the value has to be determined under rule 29. Thereafter, rule 30. 30 is a costing method. Now, at this point, let me give you an idea, a brief about the total approach for valuation. There are three basic principles of the valuation under the rules, and I call it CCB. C means comparison. First C means comparison. Second C means costing, and third B means best judgment. These 3 points cover entire scheme of the valuation rules. CCB, comparison, costing, and best judgment. So first is the comparison, rule 27. Second is also comparison. Third will also deal, rule 29 will also deal with the comparison. Rule 30 is the costing, and 31 best judgment. There are certain rules which deals with the specific category of supply, like rule 31A, lottery, betting, gambling, horse racing, etc. 32, determination of value in certain other supplies. 33, in case of pure agent. Now let me give you a brief idea about the pure agent. For example, if you are an importer, you are importing certain goods through some custom house agent, CHA. So CHA will undertake all the activities on your behalf. He will pay demurrage charges, he will pay customs duty, he will arrange loading and unloading of the goods at the port, then he will also arrange transportation of the goods from port to your factory. So besides his own charges, he will be incurring certain charges for all these activities on behalf of you. So he will raise an invoice, which will consist of his own charges plus whatever expenses he has incurred for you. Such type of transactions comes within the purview of the pure agent, because when he is paying the customs duty on your behalf, or when he is arranging transportation from port to your factory on your behalf, he has no interest in it. He is simply paying money for you. So there are certain conditions prescribed that we will discuss subsequently. If all those conditions are fulfilled, then these type of expenses, this person will be called a pure agent, as I told you about the custom house agent, and all these expenses shall be deducted from the total value. In nutshell, he will have to pay GST only on the expenses incurred by or invoices raised by his charges, for his charges. All other expenses can be reduced from the total value. Then rule 34 deals with the exchange of currency. Now you may be knowing that currency is neither the goods nor the service, but the activity of exchanging the currency, or whatever commission you are charging for exchanging the currency, that is a taxable service. And so rule 34 provide for determination of value in case of exchange of currency. And rule 35, this is also very important rule. Value of supply inclusive of IGST, CGST, SGST, or UTGST. It simply means, suppose if you are charging a lump sum, this will be your total value, all inclusive of GST, inclusive of all other expenses. In that case, the rule 35 provides how the taxable value should be worked out, because the value of supply is inclusive of the taxes also, GST also. So that we will deal under rule 35. Now, as we have been discussing, that rule 27, 28, 29 deals with the concept of comparison method. Comparison method means You have to, if suppose the value cannot be, value of a particular item cannot be determined under the subsection 1 of section 15, then you have to go to the rules. So rules first say it has to be open market value. So what is the open market value? To remove any confusion, GST law under section 2 subsection 73 defines the meaning of market value. This definition says the value which a recipient of supply is required to pay in order to obtain the goods or services or both of like kind and quality at or about the same time at the same commercial level, and fourth, where the recipient and the supplier are unrelated. So this is how the concept of market value is summarized in the GST law. Or in common parlance, we can say at what price the transaction takes place between two independent persons, independent buyer. That has to be the market value. If the kind and quality is same, time is same, and commercial level is also same. Because obviously when commercial level is not same, a large buyer who is buying 1,000 tons from you, definitely he is eligible for certain discount. Cannot be compared with the buyer who is buying just 1 ton from you. So these two transactions are not at the same commercial level. So while determining the market value, it has to be like kind and quality. Time frame has also to be same, and commercial level should also be same, and obviously buyer and seller should not be related. So this is the concept of the market value. Now coming to the most complicated part of this market value definition. What is meant by like kind and quality? Now, simplest example I can give you, a TV. If you buy a local brand, or if you buy a TV from Sony or Samsung, assuming all components are same, features are same, everything is same. They are using the same type of component, same features are available, all specifications are same. But still, a local brand may be costing 40,000 and the other brand, Sony or Samsung, may be costing 50,000 or 60,000 or 80,000. So can we say since all these specifications are same, so these should be taken as the like kind and quality? Certainly not, because the brand is also one of the important factor in deciding the value or the kind or quality of the goods. Even though everything is same, but the brand name is the very important factor in deciding this case. So ideally, any supply of the same brand at the same commercial level at the same time, that will be the comparable price. Or additionally, any other supply made under similar circumstances. Now this is also a debatable point. What is meant by similar circumstances? At the best we can say which is same or closely or substantially resemble in respect of characteristic, quality, quantity, functionality, reputation, all these factors. So this is how the like, kind, and quality can be defined or can be summarized. But still, there may be many factors which may be disputable in this type of case. So we have to keep in mind all these factors if it comes to deciding the market value on this basis of like, kind, and quality. Now coming to the rule 27, where the consideration is not wholly in money. So first clause in 27, 28, and 29, all these three rules. First approach is that value of supply shall be open market value. But many times that may not be possible. So then clause B says, sum total of consideration in money plus money value of non-monetary consideration. Why? As I gave you the example of buying a mobile phone under exchange mode, you gave him 10,000 rupees or 15,000 rupees in money, and you gave an old mobile phone. So in that case, first we have to apply for the open market value. Suppose if the same brand is sold to some independent buyer without exchange, so what was its price? That shall be the transaction, or that shall be the taxable value or assessable value. Suppose if that is not available, in that case you have to work out the taxable value by totaling the consideration in money and money value of non-monetary consideration like old mobile phone, or suppose somebody is doing advertising for someone. Like in car manufacturer, sometimes it happens. Car manufacturer will supply his car and dealer may undertake advertising for the same. So dealer is not paying him only the money, plus he is also incurring these advertising expenses for him. So there are two different considerations. So money plus money value of the non-monetary consideration has to be the taxable value. But if that is not workable, then clause C says value of the goods or services of like kind and quality. Now, what is meant by like kind and quality? We have made an attempt in previous slide to give you some idea of what is meant by like kind and quality. Even if it is not workable by like kind and quality method, then consideration under rule 30 or 31. 30 deals with the costing. So that transaction value or taxable value has to be cost of procurement or manufacturing plus 10%. That will be the taxable value. Or if it cannot be worked out, then 31. Now, another important factor in this valuation approach is that all these rules have to be applied sequentially. We cannot directly jump to rule 30. First, we have to rule out the applicability of rule 27, 28, or 29. Only then we can proceed to rule 30. Or after ruling out applicability of 30, we can go to 31. Directly, we cannot jump to 31 or 30. Now, coming to rule 28, which is applicable for the supply of goods or services between related persons. Again, this rule 28, clause A says it has to be open market value of such supply. If that is ascertainable open market value, then there will not be any issue, no problem. But in cases where the open market value is not available, then clause B says the value of supply of goods or services of like kind and quality that we have already discussed earlier. And if again value cannot be worked out by applying clause A or clause B, then clause C gives you an option. The value is determined by application of rule 30, that is costing method, or rule 31, best judgment, in that order that we have already discussed. Now there is a proviso. Proviso means certain exceptions are carved out of the main provision. This proviso says that where goods are intended for further supply as such, that happens in the trading. So further supply as such by the recipient, the value shall at the option of the supplier be an amount equivalent to 90% of the price charged for supply by the customer of the related person. For example, A and B are related. A supplies certain goods to B at 100 rupees, and B supplies the same goods to an independent buyer at 110. So this proviso says in such a case, the value shall be 90% of the 110 rupees. Simply means 99 rupees. And another proviso is added here, where the recipient is eligible for full input tax credit. Now you may be aware of the concept behind it. Suppose A and B are related. So you have to derive the value under Rule 28. But suppose the B is eligible for full input tax credit. So even if there is undervaluation at the hand of A, there will be no loss to revenue because B is a related person and he is eligible for full input tax credit. So in that case, law says ki whatever is the invoice value, that shall be deemed to be the open market value of such goods or services. So factually, it may not be open market value. Say it is 50% of the open market value. But since the related person or related recipient is eligible for 100% of the input tax credit, so law says that there is no problem. It will be accepted as a open market value because there is no loss to revenue. Now coming to Rule 29, which is applicable for the supplies made or received through an agent. And normally you must have seen there are many transactions where the supply takes place through an agent and not directly between the supplier and buyer. Again, Rule 29. First option is open market value. If that is, so 27, Rule 27, 28 and 29. These deals with the comparison method of the value and its first option is for open market value. Second option, if open market value is not available, then 90% of the price charged for the supply of goods of like kind and quality. So again, a comparison is made and 90% of the price shall be taken as the fair taxable value. But this is subject to a condition, provided that his customer is not a related person. Because 90% of what? 90% of the transaction value between two independent persons. If he is related, then again, this will not be applicable. And the goods are intended for further supply. As such, you are supplying the goods to some other person further. If not, then it has to be under Rule 30 or 31. Now coming to Rule 30. Rule 30 deals with the costing method. It simply says if the value is not determined by any of the preceding rules, that means 27, 28 or 29, the value shall be 110% of the cost of production or manufacture or the cost of acquisition of such goods or the cost of provision of such services. Now, costing method, it was prevailing earlier there also under the central excise. Like we used to take the cash for value. Costing accounting standard 4. So that used to be applicable for the working out the cost of the production or manufacture or cost of acquisition. Whatever is the total cost, we have to add a nominal margin of profit of 10%, and that shall be taken as the taxable value. 31 is the residual method of, popularly it is called as best judgment. So that is why I gave you 3 acronyms, that CCB, comparison, costing and best judgment. So Rule 31 deals with the best judgment method, where the value of goods or services cannot be determined under Rules 27 to 30. The same shall be determined using reasonable means. consistent with the principles and general provisions of section 15 and the provisions of this chapter. So means whatever best judgment method you are applying for determining the value under rule 31, that has to be within the framework of section 15 and these valuation rules. Provided that in case of supply of services, the supplier may opt for this rule, ignoring rule 30. Like in case of services, sometimes it becomes very difficult to determine the cost. So that is why this rule 31 provides, in case of services, you can skip the rule 30. It is not necessary that first you have to rule out the applicability of rule 30 and then go to rule 31. No, you can directly go to 31 by skipping rule 30 in case of supply of services. Now, there are certain other things like lottery. So I would, because of paucity of time, I would like to skip because there may not be any persons who are dealing with the lotteries, etc. But in case if there is anybody, so then at the end of session they can tell me. I will take up these slides also, like lotteries or online gaming, because it is the Thane Small Scale Industries Association members. So I presume that there may not be persons dealing with the lotteries, etc. Or casino. Casinos obviously are not here. Foreign currency, yes. In case of foreign currency, then the value of service shall be difference between buying rate or selling rate of currency multiplied by total unit. Suppose if the buying rate of dollar is today say 83 rupees and selling rate is 84 rupees. So the value of service shall be difference between the buying and selling rate of currency multiplied by total units of foreign currency sold. Or exchange not in rupees. If exchange is not in rupees, many times it happens you may give him $100 and ask for 100 euros, or 110 or $20 and ask for 100 pounds. So exchange is not in rupees. So then it has to be 1% of the lesser of the two amount the person changing the money would have received by converting at RBI reference rate any of the two currencies in Indian rupees. किसी भी करेंसी को इंडियन रुपीज में कन्वर्ट करेंगे और उसका 1%, that will be the value of service. In case of air tickets, it is simple. 5% of the basic fare in case of domestic travel and 10% of the basic fare in case of international travel. That will be the value of supply of service for air tickets. Basic fare is defined in the law. It says basic fare means that part of the airfare on which commission is normally paid to the air travel agent by the airline. So that is the basic fare, because there are many components which have the greater part of the value. So for the purposes of working out the taxable value, it has to be 5% of the basic fare for domestic travel, 10% of the basic fare of international travel. इंश्योरेंस ड्यूअल बेनिफिट पॉलिसी, जहां पे कि आपको इन्वेस्टमेंट का भी बेनिफिट है और इंश्योरेंस का भी बेनिफिट है. तो इन सच ए केस द ग्रॉस प्रीमियम रिड्यूस्ड बाय अमाउंट एलोकेटेड फॉर इन्वेस्टमेंट, that will be the taxable value. Single premium policy, 10% of the premium, and in all other cases 25% of the first year premium and 12.5% of premium thereafter. This may be of interest to many persons. Determination of value of second-hand goods. This is a very prevailing practice, particularly in automobile sector. You must have seen many second-hand car dealers. In that case, the value of second-hand goods shall be difference between the purchase price and the selling price, provided no input tax credit has been availed on purchase of such goods. Suppose if you are not availing any input tax credit, and you have bought a car for 100 rupees and sold it for 120 rupees. So assessable value shall be only 20 rupees. Difference between the purchase price and the selling price. But there is another situation. Hire purchase scheme, or you are buying certain goods on loan. Suppose if you have bought a car by taking bank loan and you could not pay the loan. So bank take over the car. So that is, we are talking here about the repossessed goods. In that case, what shall be when the bank will be selling that repossessed car, so what shall be the taxable value? Then Rule 32 says purchase value reduced by 5% per quarter if borrower is unregistered. So if you are unregistered, your car is taken away by the bank, then the taxable value shall be purchase by price reduced by 5% per quarter. Suppose if you have used the car for 2 years, so in 2 years there are 8 quarters. So 40% will be reduced from the purchase price and remaining value shall be the taxable value for the purposes of GST. However, if the borrower is registered, value shall be the transaction value without any reduction. That means at whatever value the buyer, or sorry, the bank is selling the goods, that shall be the transaction value. So this is comparatively simpler. In case of second-hand goods, the taxable value shall be the difference between the purchase price and the selling price. There is another case of vouchers, coupons. Many persons are issuing vouchers or coupons or using. So then the value of a token or a voucher or a coupon redeemable against a supply of goods or services shall be equal to the money value of the goods or services, or both redeemable against such token or voucher. This is also quite simple. And supply between distinct persons. That is the covered under para 2 of the schedule 1, because the para 2 of the schedule 1 says that supply shall be come within the scope of supply without consideration also. So supplies between distinct persons, even if there is no consideration, those will be treated as taxable. Now you may be having some basic idea about the scope of supply, that there should be supply of goods or services and there has to be consideration. Only then it will come within the scope of supply. But the transaction between distinct persons, even without consideration, is brought under the scope of supply. So that is under para 2. In that case, those type of supply, the value shall be deemed to be nil wherever input tax credit is available. Suppose my related person, I am supplying certain goods to related person, and he is eligible for full input tax credit. So even if value is shown as nil, that will be acceptable and that shall be the taxable value, because there is no loss to revenue or no risk to revenue. He is eligible for full credit, and then he will be eligible for input tax credit only when he is paying output tax on that supply. So it can be safely assumed that there is no risk to revenue, because whatever goods he has received without payment of any GST or at lower value or at any or zero value, ultimately the tax will be paid on that supply. Now coming to pure agent. Subject to fulfillment of certain conditions, the expenditure and cost incurred by the supplier as a pure agent of the recipient of supply of service has to be excluded from the value of supply. So that I have already discussed some time back by giving the example of custom house agent. What he is incurring many expenses on your behalf. So obviously those expenses shall not be counted as his value of taxable supply, and full deduction of those expenses shall be allowed subject to certain conditions. There has to be some agreement. He should not hold any title to those goods or services which were procured for you, or those are shown separately in the invoices. No extra amount is charged. Suppose he is paying customs duty on your behalf of 1 lakh rupees, and he is charging you only 1 lakh rupees. So there is no addition on his account or on his part. So that shall be allowed to be deducted. So actual expenses should be reimbursed. There should be agreement. He should, that your agent should not hold a title to the, title means ownership. That means the invoice is not in his name. In that case, all such expenditure and costs shall be allowed to be excluded from the value of supply. That is under Rule 33. 34. Rate of exchange of currency other than Indian rupees as fixed by CBIC under Section 14. As I told you, in case of exchange of currency, the value shall be the difference in the buying and selling rate. So how to determine the buying and selling rate? So these are fixed by the CBIC under Section 14 of the Customs Act. So that will be the value of those currencies. Now coming to one of the most important, sorry, यहाँ title थोड़ा सा ये गलत है, that I have to change. It deals with where the value of supply is, Rule 35 deals with the value of supply, which is inclusive of integrated tax, or as the case may be central. So it means when the value of inclusive of GST, like IGST, CGST, SGST, or UTGST, in that case, taxable value, how it is to be worked out? It is to be value, tax amount shall be the value inclusive of taxes multiplied by tax rate in percentage of जो भी है IGST है या SGST है, multiplied by 100%, or sorry, 100 plus sum of the tax rate as applicable in percentage. So this is how the value has to be worked out. On this slide, it may appear a little bit typical. Now let me give you practical example. Suppose if you have charged 110 rupees from someone, and that is inclusive of GST also. So what will be your tax amount? And suppose the rate of GST is 10%. So obviously by looking at the 110 rupees, you can easily count ki in that case, the value has to be 100 and the tax amount is 10. So that is why the total amount is 110. Now to put this transaction in this formula, 10 shall be equal to 110 multiplied by tax rate, that means 10. Yani 110 multiplied by 10 will be 1100 divided by 100 plus sum of tax rate, yani 100 plus 10. So that will give you the 10. 1100 divided by 110. So it gives you the amount 10. So that will be your tax amount. So in cases where the value is inclusive of the taxes, GST taxes I am talking about. So the tax amount has to be calculated by application of Rule 35. So now these are the summary points. Distinct and related persons have been defined in the Section 25, and as we are running out of time, so I am skipping it. Related persons, these are the definitions. Only one point I will touch upon. Clause 4 of this related person, it is given in the explanation to Section 15. It says any person directly or indirectly owns, controls, or holds 25% or more of the outstanding voting rights. So own you can understand easily, or hold 25% or more of outstanding voting, that can also be worked out. But what is the meaning of control? Then we have to go to the Companies Act. Section 2, subsection 27 of the Companies Act defines control as under. Control shall include. So that means the word control, its meaning shall be derived from the definition of under the Companies Act. Control shall include the right to appoint majority of the directors or to control the management or policy decisions exercisable by a person or persons acting individually. In nutshell, when it comes to deciding whether a person controls an entity or otherwise, because for the working out whether he is related or not, this is one of the important factor. So whether he control it or not, you have to go to the definition under the Companies Act for finding out whether the control is said to exist or not. This is the summary. So we have already given the distinct or related person, first open market, then comparable value, and then costing. And if costing is not, then lastly, best judgment. These points we have already discussed. Now let us discuss, lastly, let us discuss one example, which a very interesting case came to my notice recently. The manufacturer is having wholesale dealers, and some expenses such as advertising expenses, display, glow signboard, maintenance, etc. are incurred by wholesale dealers on behalf of manufacturer. Now, their point of view I am talking about. What they said, if these expenses will not be included in the taxable value of supply of the goods which are supplied by the manufacturer. Now, wholesale dealers are incurring these expenses and the manufacturer is reimbursing them. So that means, say, he is manufacturing car. So he is supplying the car at the price of rupees 5 lakh. But the advertising expenses, display, glow sign, all these expenses are incurred by wholesale dealer, but reimbursed by manufacturer. So those are not forming the part of his value of the car. Now the question was whether these can be added to the value of the car by applying section 15(2)(b). 15(2)(b) जैसा हम लोगों ने थोड़ी देर पहले डिस्कस किया था. It says expenses incurred by the recipient but which the supplier is liable to incur. All such expenses which are incurred by the recipient of supply, but in fact supplier is liable to. So their argument, supplier or the car manufacturer is not liable to incur all these expenses. This is at the discretion of the wholesale dealer. But the first point, if it is not, then why he is reimbursing it? Second point, whether it is not increasing the value of his car, like advertising, is he not benefited by all these activities? Obviously, by advertising, display or glow signboard or maintenance, etc. This will add to the intrinsic value of the car at the point of supply. At the time of supply, all these factors will increase the marketability or market value of the car. So this 15(2)(b) will come into application, and there is a very famous judgment, though it was related to central excise, but all these principles are very much applicable in such cases. So whatever factors have contributed to the value of a product till the time of delivery shall be part of the value of that product. So that is the sum total of that judgment, and that judgment by the Supreme Court, in which a very eminent lawyer, Nani Palkhiwala, appeared and contested for respondent, but the High Court ruled it against the taxpayer. So 15(2)(b) shall come into play. This is the 15(2)(b). Let me give you a fair idea about it. Any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply, and not included in the price actually paid or payable for the goods. So the value of supply shall include it. I gave you the basic criteria or reason also why such type of example, why such type of expenses, that example I just gave you, should be part of the value of that good, because all these have contributed to the intrinsic value of the goods at the time of supply, and these were liable to be paid by the supplier because he is benefited and he is reimbursing it to the wholesale dealers. So 15(2)(b) definitely will come into play. So by this, let us conclude our session and let the question answer session be open. So over to you, Singh sir.
Thank you so much, Sengarji.
Ji.
So now participants can ask the question if they have any doubt, and alternatively they can write the mail to DGTS MZU, and our mail ID is in chat box. So we will reply to the mail within very short periods. So if there is any question, you all can ask Sengarji, or else
Or they can post the question in chat box also if they want to.
yeah, there is no question till now in chat box. Your
Only
presentation was very good and you
there,
explained everything.
there is a question in the chat box. Sir, can you go through the single?
Okay.
Okay.
What is the question? Can we have this presentation?
Okay, so this is about the pure agent case. CHA incurring expenses on behalf of his customer of ₹100. However, he is charging ₹110 from his customer, saying that 110 is reimbursement of expenses incurred on behalf of his customer. No. This is one of the important condition of Rule 33, that he should ask for reimbursement of only actual amount. He cannot add anything over and above it. In that case, he will not get the benefit of that pure agent under Rule 33. So this cannot be reduced from his taxable value. Only actual amount if you are charging it. There are five important conditions that one should have the agreement contract for it. So contract may be oral also, because under the Contract Act you may be knowing that it is admissible. And he should not hold title to it, title to the goods or services which are procured for his client. So title means ki invoice should not be in his name, because the title is shifted by way of invoice only. So title means that invoice should also be named in the name of client. Third important condition is that he should only charge the actual amount incurred for his client. So he cannot add ₹10.
So with this, I think there is no more questions left. And on behalf of DGTS Mumbai Zonal Unit, we thank you, Sengarji. And now the formal vote of thanks will be given by Assistant Director, Sri Sanjay Kumar. So over to you, Sanjay.
Thank you, sir. Thank you. Good afternoon, everyone. I'm Sanjay Kumar, Assistant Director at DGTS Zonal Unit. After the successful webinar on Valuation under GST, it's time for vote of thanks. First of all, on behalf of DGTS Mumbai Zonal Unit, I extend my sincere thanks to our Principal ADG Sir, Sanjay Rathi Sir, for his valuable guidance and support in organizing this webinar. I also take this opportunity to thank our trade panelist, CS Nandan Mbetteji, for sparing his valuable time and attending this webinar. Thank you, sir, for your kind address. My special thanks to our speaker of the day, Sri MPS Sengarji, for delivering such an insightful and in-depth address, in-depth presentation on the topic. Thank you, sir. I'm sure our taxpayers and other stakeholders must have benefited from the knowledge you shared through this presentation. Thank you so much, sir. And lastly, a big thank you to Team DGTS, especially our Additional Director, Sri A.K. Singh, sir, for taking initiative in organizing this webinar. Now, with the kind permission of our Principal AD, sir, we would like to bring this session to an end. Thank you. Thank you all.